Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a good day. It's hitting the headlines around the world more and more, this China slowdown. And as the little sort of story I like to tell is that the soft landing is some way off, as we still have no airport in sight for such a soft landing to happen for the Chinese economy. So problems still ahead. And even as the Australian Treasurer pointed out today, Chalmers, and I've been saying recently as well, I mean, the slowdown in China, if it deteriorates further, if we get another contraction quarter for China, as we did during the COVID lockdowns, without COVID lockdowns, that's a worry for the entire world. I note some US economists are a little bit gleeful about the Chinese slowdown, which is rather perplexing and completely beyond comprehension, given that China's economic boom is a large part of keeping Western economies going during the GFC. Nevertheless, I think it needs to be said that if China's economy slows much more, the global economy, including the United States and Europe, is going to be in a lot of trouble. It would really pull the rug out from under a lot of global fund managers' hopes for some kind of global economic rebound to justify all that stock buying they've been doing. And as I've been highlighting for some time, manufacturing is truly diabolical. It's in recession in China, it's in recession in the United States. Germany's just had a recession for its whole economy, and Italy is having negative growth at the moment, and manufacturing generally in Germany and France is problematic at this point. The economic data on manufacturing on the day, well, we saw 5th District in the US manufacturing data come out, and that's been in contraction for a whole year. Manufacturing has been shrinking in the United States for a whole year. All of manufacturing data is saying that, and it's continuing to shrink. That's not a good state of affairs. In Japan today, we saw their PMI edge up slightly, but apart from 1 month, Japanese manufacturing has been in contraction all this year as well. In Australia today, we saw the Judo Bank Australian manufacturing PMI, and that's been in contraction for 3 months now, just plateauing. Services PMI in Japan today, still in expansion territory, but very much flatlining. I think the slight boost occurring in Japan is not going to be by any means enough to take up the slack of this slowdown in China. And in China, we're seeing more and more of the biggest financial names come to grief. We're seeing massive bankruptcies, and there could be more to come. I think the Chinese authorities have plenty of room to do more to help. To their credit, they are allowing market forces to come to bear on some of these organizations. You know, you can't say, just go out and do whatever you want. If it all goes wrong, we'll rescue you, the way US policy is. China's having a far more responsible economic approach on this particular, property bubble type scenario situation that's unfolding by saying to these big organizations, if you get it wrong, you pay the price. But China will be there, the Chinese policymakers will be there to support the broader economy. And if the crisis intensifies too much in China, I think they can step in and do more there as well. But there's not going to be any sort of golden handshake the way that occurs in the United States, where bankers are always bailed out, or financiers and property financiers are always bailed out. That may not be the case this time around. The property market in the United States, by the way, is in serious, serious trouble. Commercial borrowers, I saw a piece the other day, a fellow who was refinancing one of his many buildings, large property portfolios, a $50 million building in a major US city. He couldn't even refinance a $9 million tranche on that building. So, you know, lenders do not want to lend on property in the United States at the moment, and a lot of debt rollovers are fast approaching. So we're going to have an intensifying property market slowdown and crash. Residential properties are falling, commercial properties are falling in the United States. We're going to have a much more intense property market downturn in the United States on top of the manufacturing recession. We're going to have an even more intensive property market downturn in China on top of a manufacturing recession. Europe, residential property there is starting to hurt as well. Not quite as much, but it's a little bit, I think, fragile. So just look at the world's two largest economies, and both have various serious challenges. The difference, again, I would point out, is that China is at least having some policy response, and with low inflation has the room to maneuver more aggressively than the United States. The thing that's worrying about the United States is the current administration just walks around saying how strong the economy is when it's not. And that means there is no policy help coming from Washington. And the Federal Reserve is intent on maintaining rates where they are. We cannot even rule out another rate hike. So I don't think that will happen, but that's how firm the tightening bias is. So I think we should assume the global economy is about to fall off a cliff. And we should adopt appropriate investment policies for just such a scenario, so that we're empowered to take advantage of the opportunities that will surely emerge. Thank you very much, Clifford Bennett.